So here's a mystery for you. Two companies go public around the same time. One sees this absolute explosion of interest, while the other kind of fizzles out. What makes one IPO a total blockbuster and another a bust? Well, we're going to play detective today and follow the clues hidden in the market data to solve this thing. Let's get right into it. First up, let's meet our two main characters. In one corner, we have Advance AgroLife, an agrochemical company, and in the other, Ohm Freight Forwarders, a logistics company. Now, both of them recently held their initial public offerings, asking the public to invest for the first time. But as you're about to see, that's pretty much where the similarities end. For one of these companies, the investor demand was just completely off the charts. The offering was oversubscribed a staggering 57 times. I mean, think about that. For every single share that was available, investors were lining up to buy 57 of them. Incredible. And the other one? Well, it just kind of squeaked past the finish line. It ended up with a final subscription of less than 4 times. You could call that a pretty lukewarm reception, to say the least. So, this massive difference brings us to the core question, right? What is it? What's the secret sauce that separates a market blockbuster from a listing that everybody just kind of forgets about? Let's dig into the data and follow the clues. Our investigation is going to start with the underperformer Ohm Freight Forwarders. Let's really break down its IPO and see if we can figure out why it got such a quiet, polite welcome from the market. Okay, first things first, let's make sure we're all on the same page with a key term here, subscription. It's really just a simple measure of demand. So if an IPO is subscribed 10 times, it means investors applied for 10 times the number of shares that were actually available. You can basically think of it as taking a direct pulse of how the market is feeling. Now, to really understand the demand, you got to know who's doing the buying. The first group we'll look at are the QIBs, or Qualified Institutional Buyers. These are the big players. We're talking mutual funds, banks. They're often called the smart money because, well, when they jump in, it can signal confidence to everyone else. So let's look at the breakdown for Ohm Freight. The so-called smart money, the QIBs, they subscribed just under 4 times. High net worth individuals, or HNIs, they were a little more interested, coming in at nearly 8 times. And what about retail investors like you and me? Barely showing up at under 3 times. You see? It's pretty clear no single group was showing that overwhelming gotta-have-it interest. There was this brief moment of interest from the smart money on the second day in a move that some people call a QIB trap. The whole idea is to kind of lure in the smaller investors by making it seem like the big guys are super confident. But in this case, the trap just didn't work. The QIBs didn't really up their bids, and the retail crowd just didn't take the bait. This weak demand, this feeling, had a direct impact on something called the gray market premium, or GMP. The GMP is a really crucial, unofficial indicator of how a stock might do on its first day of trading. For Ohm Freight, it was just 1.5%, a tiny number. It was basically a direct reflection of the market's collective shrug. All right, now let's completely flip the script and turn to our blockbuster case, Advance AgroLife. Its story could not be more different. It started out slow, but it ended in this spectacular last-minute frenzy. The journey for this IPO was seriously dramatic. On day 1, it wasn't even fully subscribed. Crickets. Day 2 showed a little positive momentum, getting just under 2 times. But then, on the final day, it was like a dam broke. The numbers just exploded to a massive 57 times. So you gotta ask, what on earth happened? The answer lies with our second group of key players, the HNIs, or high net worth individuals. These are wealthy investors who have the kind of capital to apply for huge blocks of shares, and in this story, they were absolutely the driving force. And here is the money shot. I mean, just look at that towering bar for the HNIs. It tells you everything you need to know. They subscribed a mind-boggling 175 times over. They completely dwarfed the QIBs and the retail investors. This wasn't just participation, this was a stampede. To try and put that into perspective for you, just one small segment of those wealthy investors, the big HNI category, they alone bid for shares worth over 3,890 crore rupees. That is an enormous amount of capital chasing just this one stock, and it single-handedly turned this IPO into a blockbuster. And what did this feeding frenzy do to the gray market premium? Well, it pushed it all the way up to 11%. Now compare that to the measly 1.5% for Ohm Freight. This figure was signaling really strong anticipation for a very, very positive first day of trading. Okay, so we've examined all the evidence from both cases. Now, let's put it all together and figure out what these clues really mean for an investor who's watching all this from the sidelines. I mean, when you put them side by side like this, the contrast is it's stark. It's night and day, right? On every single key metric, the final subscription, what was driving it, the gray market premium, these two companies were in completely different leagues. One was a story of absolute frenzy, the other of caution. So why does this matter to you? Well, here's the thing. For a massively oversubscribed IPO like Advanced AgroLife, your chances of actually getting any shares allotted to you are, let's be honest, very, very low. The flip side, though, is that intense demand often signals that the stock is probably going to open at a much higher price when it starts trading. Let's translate that GMP percentage into actual money. That 11% premium for Advanced AgroLife, it suggested a potential gain of around 1,200 rupees on just a single lot of shares on day one. Now, for Ohm Freight, that 1.5% premium signaled, well, a minimal potential gain. The market's excitement, or lack of it, has a direct financial impact. So there you have it. We've solved the case. The huge difference was driven by overwhelming demand from one specific group of investors. So what are the key takeaways you can use the next time you're watching an IPO? Here's a simple 3-step framework. First, just watch the overall subscription numbers day by day. Second, look a little deeper. See who is driving that demand. Are the smart money and the wealthy individuals jumping in aggressively? That is a powerful signal. And third, keep an eye on that gray market premium as a sort of sneak peek for listing day expectations. Now, it's really important to remember, market demand is a powerful indicator, for sure, but it's also really volatile. It reflects that short-term hype more than the long-term value of a company. And the behavior of different investors, as we saw, it tells a really compelling story. Most importantly, and I can't stress this enough, please remember this is not investment advice. It's simply a framework to help you observe and understand the market dynamics at play. And all of this leaves us with one final crucial question. When you're looking at an opportunity, which clue do you prioritize? Do you follow the short-term frenzy of the market, or do you focus on the long-term fundamentals of the company itself? Definitely something to think about.